Good morning, traders, and welcome back to the Sensa Edge, where we cut through the noise, follow the smart money, and help retail investors move with strategy, not stress. Today's episode, Ray Dalio's macro outlook with what just happened in the market and how you can use this info to position smartly. Again, let's check the facts. US market just took a beating yesterday. S&P was down 2.4%, Nasdaq shed 2.6%, and Dow Jones saw its worst day in weeks. The reason a mix of geopolitical jitters, trade war fears, and uncertainty over the Fed independence. Blaming rate policies for economic weakness, China's not backing down either, a threatening retaliation against US trade allies. This has sent the investors rushing into the safe haven. Gold crossed $3,400. Bitcoin was hovering around $87,000. Treasury yield are ticking up, but demand remains strong. It's a chaos, but smart money sees chaos as opportunity. Again, let's zoom out. Ray Dalio, founder of Bridgewater. Let me bring up my screen here. Right. If you see in the Sensa market, you can track all those institutional players. I'm bringing up Ray Dalio's as selected the institutional. And Ray Dalio is the founder of Bridgewater, the largest hedge fund here, just warned that they may be entering a period worse than a recession, and here's why it matters. He outlined four major forces shaping the global economy. History debt bubble reaching its breakpoint, extreme internal political division in the US, the breakdown of the world order with rising powers challenging the US dominance, and the fourth one, technological shifts reshaping everything. Put together, he says we are experiencing the kind of structural breakdown, and is not just not waving the warning flag, but is adjusting his own portfolio to reflect this outlook. So continue to track on this 13F filing. So in like a couple of weeks, we'll be able to see the new filing from the Q1 2025 coming right here. Again, here's what the smart money is doing, what you can track right now on the Sensa market, 13F filing, and every other big hedge funds positions right here in this institutional thing. All right. So again, into the bonds, many people are shifting from the out of the high beta tech into the bonds, which is also a defensive sectors and global inflation hedges. Again, if I have to pick one particular example, TLT as of yesterday was trading around $86. A modified risk reversal strategy on this can be a structure, could be a good option strategy, and could be a potential setup. Again, if you ask me how the TLT moves, if the interest rate goes up, bond prices fall, TLT goes down. When the interest rates go down, the bond prices rise, the TLT goes up. Because of this inverse relationship, TLT often rallies during recession fears, rate cuts, and risk of market sentiments. Why traders watch this TLT, you might ask, right? It's a favorite tool for macro traders, hedge funds, and even retail option traders. It's a highly liquid and a robust option market, which is why strategies like put spreads with a call buy could work really well. So this is the option strategy builder screen. I've already picked up the TLT, and then I've set up this particular positions, which is nothing but put spreads plus the call buys, which works really well on the TLT here in this case. Again, it goes well what ties to what Ray Dalio has been warning about, a modified risk reversal strategy. You are selling, I've selected May 9th, again, feel free to explore that. You're selling a particular put at 85 put, you're buying a put at $80, and you're buying a call for 93 call position. The rationale behind the put credit spread, which is the sell $85 put right here and buy $80 put, the bullish spread generates premium income benefiting TLT if it remains above the $85 by expiration. In this case, if you can see here in this particular strategy, profit loss graph here. The long call, which is at $93 call, provides an upside exposure if the TLT rises anywhere above 93, allowing for additional profit beyond the put spread. Again, TLT, if the maximum profit from both put spread together and the long call is where the maximum potential is, which is beyond $93. If the TLT is between 85 and 93, profit from the put spread, the call might expire worthless. If TLT is between $80 and $85, there's a partial loss on the put spread, the call expires worthless as well. TLT below $80, again, completely, you are in the right zone. You can simulate this particular trade right now in the Sensa user option strategy builder. Visualize the risk before you even place a trade. Dalio's warning is clear. Monetary breakdowns, political chaos, and global power shift, they're not just themes, they are big triggers. Let me bring myself back here. Right? The edge isn't about knowing what's happening, it's about positioning smartly before it hits the retail news. So here's a checklist for today. Check the 13F filing on the Sensa. Continue to track that because the filing for all the institutional players is going to come up in the next few weeks. Scan for new option flow setups, which is TLT, GLD, and all the defensive stocks. Try out modified risk reversal strategy in the builder screen. And finally, and stay nimble because in the market like this, structure beats protection. Trade smart and allocate responsibly. See you all next time.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.